Hello everyone, welcome to EduTap and welcome to today's session. So first of all, I hope I'm clearly audible and visible to all of you. And in today's session, we are going to discuss three very important finance current affairs. The first one is regarding the Supervisory Data Quality Index, the score that has been released for June 2025. So this is the news article from September. Okay. The next news article is regarding the RBI that has launched the scheme to reduce the stock of unclaimed deposits by incentivizing the bank. So this is a very important scheme that has been launched by the Reserve Bank of India. If the RBI is releasing a scheme, that is very important. Okay, so there are basic details that we have to discuss and the data points that we have to discuss, so that we will be discussing. Okay, then next is about the FX, the foreign exchange retail platform that has been linked with the Bharat Connect. So which entity launched this platform, as well as since when it has been launched, how it is getting connected with the Bharat Connect, how it is going to help the customers, all of this we are going to discuss in today's session. So give me a thumbs up if I'm clearly audible and visible and everything is very good, everything is very well. So let's get started. Okay, so first of all, like before starting with the articles, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join the Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so let me tell you that these three articles that we are going to discuss today, from these three articles, direct questions, the direct factual questions can come in the RBI Grade B Phase 1 examination, that is on 18th of October. So I hope you will see these sessions and will keep in mind the important data points. Okay, so let's get started. So Reserve Bank of India has released the Supervisory Data Quality Index for Scheduled Commercial Bank for June 2025. Now, as you know that the scheduled commercial banks, they are regulated under the Reserve Bank of India. Okay, and the scheduled commercial banks, they have to provide the data, they have to submit the data, they have to do the submission of returns or the submission of data to the Reserve Bank of India. Now, if the scheduled commercial banks are providing accurate data, or they are providing the data in the timely manner, or the data that they are providing is complete, so all of this is seen by the Reserve Bank of India, and as per that, the quality of the data is checked by the Reserve Bank of India for the data that is submitted by the scheduled commercial bank. So Reserve Bank of India has released the Supervisory Data Quality Index for Scheduled Commercial Bank for June 2025. It measures the data quality in terms of accuracy, timeliness, completeness and consistency. So these are the four parameters for the Supervisory Data Quality Index. Okay, so Supervisory Data Quality Index, how is the quality of the data of the scheduled commercial banks that they are providing? So this index is prepared on the basis of these four parameters: accuracy, timeliness, completeness and consistency. Okay, now the objective of Supervisory Data Quality Index is to assess the adherence to the principles that were written down in the Master Direction on Filing of Supervisory Returns in 2024. So in 2024, there was a Master Direction that was released, in which it was notified that these are the principles that the scheduled commercial banks have to follow when they are submitting the data to the Reserve Bank of India. Now the Supervisory Data Quality Index checks that the scheduled commercial banks are following this Master Direction or not. Okay, so Supervisory Data Quality Index, it checks the data quality that is provided by the scheduled commercial bank in terms of accuracy, timeliness, completeness and consistency. So the Master Direction that was released in 2024, this was for all the supervised entities that were required to submit their supervisory returns, their data, to the Reserve Bank of India as per various directions, circulars and such. So this Master Direction is a single reference for all the supervisory returns, and to harmonize the timelines for filing of the returns. So basically this Master Direction was released for all the supervised entities so that they can file the supervisory returns, or they can provide the data in a timely manner, in a good manner, and there were certain principles that were laid down in this Master Direction that has to be followed by the supervised entities, by the regulated entities of the Reserve Bank of India. Okay, so all the returns, all the risk reports should be rechecked with supervised entities' own sources, including accounting data where appropriate, to ensure the accuracy and completeness of the same. So basically, whenever the report is being submitted, whenever the data is being submitted to the Reserve Bank of India, the accuracy and completeness has to be checked, and the report has to be checked with the internal data basically. Risk data aggregation capabilities and risk reporting practices. So risk data should be aggregated, that where in which category there is how much risk that is present. Risk reporting practices should be proper, should be fully documented and subject to high standards of validation. There should be validation that should be done, that the processes that is being followed, the practices that is being followed is the best practices by the scheduled commercial bank, by the supervised entities. Build and maintain the data architecture supporting the IT infrastructure for accurate, complete and timely data aggregation and reporting. So there should be the IT infrastructure that should be robust with the supervised entities so that they can provide the timely, accurate and complete data, and there is no problem that is coming in submitting the data. Okay. Not only in normal times but also during the stress or crisis, there should be IT infrastructure that should be maintained in a well manner, so there is no problem in the data submission. So this is the basic idea, that there was a master direction that was released in 2024 in regards to submitting the data, in a accurate, timely, complete and consistent manner. Now the Reserve Bank of India has provided the Supervisory Data Quality Index that checks the data quality for the submission, for the data that is submitted by the scheduled commercial bank. Okay. Now what is the value? So basically Supervisory Data Quality Index, if you remember that we have discussed this in June 2025. So in June 2025, the Supervisory Data Quality Index was released for March 2025. Okay, and now in September 2025, the Supervisory Data Quality Index is released for June 2025. Okay, so basically from March 2025 to June 2025, there is the improvement that has happened in the data, in the quality of the data. So Supervisory Data Quality Index score of scheduled commercial banks has improved in June 2025 as compared to March 2025. Okay, and March data was released in June and June data is released in September recently. So here you can see that for the scheduled commercial banks, the value, the Supervisory Data Quality Index score was 89.3 in March 2025, and in just a few months you can see that the value has improved. Supervisory Data Quality Index score has improved to 89.9. Okay, so this is the value that you have to keep in mind. For the other banks you can see that the value has improved, but the highest value is in the case of the Small Finance Bank. For the Small Finance Bank, the highest value is there. Before it was 90.6, now it is 90.7. So remember these values, as a direct question can come on this value, that what is the increase in the Supervisory Data Quality Index in June 2025, or what is the value of Supervisory Data Quality Index in June 2025. Now if you can see for all the categories of bank, for scheduled commercial bank, for private sector banks, for the public sector banks, foreign banks, small finance bank, for all these banks, the value is in between 80 to 90. That is, the data quality is acceptable. The data quality is acceptable. As well as for the Small Finance Bank, the value is more than 90. So that means the data quality is good by the Small Finance Bank. Any confusion anyone has till now? Is this getting clear? I hope this is very much clear. Okay. Now moving forward, so here the trend in the parameters in overall Supervisory Data Quality Index. So basically data quality is checked through accuracy, consistency, completeness and timeliness. So you can see the timeliness has improved, that the data is being submitted in a timely manner. The completeness has also improved, as well as the accuracy has improved and the consistency has also improved, and that's why the Supervisory Data Quality Index score has also improved. So this is the idea. Now the score has improved from 89.3 to 89.9. This is the idea. So for the scheduled commercial banks, the Supervisory Data Quality Index has improved from 89.3 to 89.9. That means the data quality has improved basically. Now the timeliness depends upon various factors. So these are the parameters on which the Supervisory Data Quality Index depends upon. Now these parameters depend upon certain sub-parameters. Like the timeliness means number of instances of delays in a year. If there are any delays, so how many times the delays have happened. Days of delay, let's say only 1 day of delay happened or a month of delay happened. So how many days of delay happened? Number of revisions that were done in the data. Okay. Completeness, submission of all returns, were all data submitted, were all reports submitted. Mandatory fields, were they filled or not? Okay. Accuracy, within current period, with past data periods, if we see in the current period the data is accurate or not, or with the past periods the data is having the good trend or not, or the correct trend or not. Okay, within returns and between returns also there are accuracy or validation that has been done or not. Other data sources, so accuracy is checked through other data sources also. Consistency, average of accuracy scores of past periods, so there is consistency in the submission of data as well as consistency in the accuracy of data or not. So this is the idea. So the scores are computed for the bank group, that is your public sector bank, private sector bank, foreign bank, and small finance bank. So for the scheduled commercial bank, the supervisory data quality index is released, and for the different categories of the scheduled commercial bank, public sector banks, private sector banks, small finance bank, and the foreign bank. So this is the supervisory data quality index. Any confusion, anyone? Now, accuracy, the dimension of accuracy, as the name suggests, assigns the scores based on the accuracy of the data. Okay. Now remember this, that in the digital payment index that is also released, on the half yearly basis, in the digital payment index there was a question from the sub parameters. Okay, so that's why the supervisory data quality index, there can be a question directly from the value or from the parameters or from the sub parameters also. Okay, so accuracy, the dimension of accuracy, as the name suggests, assigns the scores based on accuracy of the data that is submitted in each return by each supervised entity. Completeness, the dimension of completeness, assigns score based on the data submitted in each return and the number of returns that have been submitted. The assessment is based on the hypothesis that the values of all components of a single datum are valid. If not, then its completeness is destroyed. Okay, so basically the values are complete, the values of all the returns have been filled, so there is a complete data that is provided. If the complete data is not provided, then it is hard to understand that what the data is trying to say. Okay, timeliness basically means that timeline has been met for submitting the document, submitting the data. Consistency, the dimension of consistency, checks for the consistent accuracy of data for the previous quarters. So this is the basic idea. I hope this is very much clear. Now coming to the supervisory data quality index, now the good thing is that in March 2025 there were certain entities, there was one entity. Okay, for the March 2025 data there was one entity that was between 70 to 80 score only. But now in June 2025 there is no entity that is between this score. All the entities are either between 80 to 90 or more than 90. So you can understand that there are 87 scheduled commercial banks that have been covered under the supervisory data quality index for scheduled commercial bank. So 87 scheduled commercial banks, they have been covered for calculating the supervisory data quality index. Now all these 87 scheduled commercial bank, they had acceptable data quality index, or they had good data quality index. None of the entity was in the range of 70 to 80. Okay, in June 2025. So this is a good news. Now supervisory data quality index covers 87 scheduled commercial bank and their key returns: return on asset, off balance sheet exposure, return on asset quality, return on operating results, risk-based supervision return, and all of this. So this is the basic idea of the supervisory data quality index. Now the master direction, Reserve Bank of India filing of supervisory return directions 2024, they are motivated by the principle 13 of Basel Committee on Banking Supervision. So a direct question can come that on which principle this master direction or the supervisory data quality index is based on. So it is based on principle 13 of Basel Committee on Banking Supervision, okay, which states that supervisors should have and use the appropriate tools and resources to require effective and timely remedial action by a bank to address deficiencies in its risk data aggregation capabilities and risk reporting practices. So basically it is said that the Reserve Bank of India or the supervisors should have and use the appropriate tools and resources so that remedial action is taken by a bank if there is any deficiency in the risk data aggregation capability, if they are not able to aggregate, if they are not able to collect the risk data, or they are not able to report the risk properly. Then so the RBI supervisors, that is RBI in this case, should have the appropriate tools and resources so that it can mandate the banks and it can help the banks take the remedial actions so that the banks can improve on their deficiency in their risk data aggregation capability or risk reporting practices. Okay, so this is the idea. Now, Basic Committee on Banking Supervision, this is the primary global global standard setter for the prudential regulation of banks and provides a forum for regular cooperation on the banking supervisory matters. Its 45 members comprise central banks and bank supervisors from 28 jurisdictions. Now, many central banks such as European Central Bank, Federal Reserve of Kansas City prepare such data quality indexes also. Just this is the basic idea, okay? This is the additional information. Now, coming to the next news article, any confusion anyone has in the first one? Now, we are going to discuss the scheme. Any confusion anyone has in the first article? Supervisory Data Quality Index, is it clear? Moving forward with this next article. So the Reserve Bank has launched the scheme for facilitating accelerated payout in operative accounts and unclaimed deposits. So basically, I hope you know that the deposits, there are certain unclaimed deposits that are not claimed by the individuals, by the people. Okay, so there are unclaimed deposits with the banks. And if the unclaimed deposits, if the deposits remained unclaimed for 10 years or more, these deposits are sent by the banks to the Depositor Education and Awareness Fund. Okay, and there are the inoperative accounts that are not operative for 10 years or more. So Reserve Bank through its public awareness initiatives have been encouraging members of public to activate their inoperative accounts and claim their unclaimed deposits from the banks. In this endeavor, to encourage the banks to actively pursue customers or depositors for reactivation. So basically, RBI has been trying a lot. RBI has been taking a lot of steps so that the people can like the member of public, the people can activate their inoperative accounts or they can claim their unclaimed deposits. In this endeavor, to encourage the banks to actively pursue the depositors or the customers for the reactivation of their inoperative account or for claiming their unclaimed deposits, the RBI has encouraged the banks to actively pursue the customers or depositors, okay, for reactivating their inoperative accounts or return of their unclaimed amounts lying with the Depositor Education and Awareness Fund, because the customers should get back their money. They should be able to access their money. Okay, so Reserve Bank now has launched the scheme for facilitating accelerated payout for inoperative accounts and unclaimed deposits. So this is the scheme that has been launched. Now the scheme aims to reduce both the stock of existing unclaimed deposits as well as fresh accretion of the flows to the Depositor Education and Awareness Fund. So what is the aim of the scheme? The scheme wants that the unclaimed deposits that is lying with the Depositor Education and Awareness Fund should be returned, as well as the new accretion, the fresh addition of the flows should not happen to the unclaimed deposits, because the money of the customer should remain with the customers only. The unclaimed deposits should not be there. Okay, so fresh accretion, fresh addition of the flows to the Depositor Education and Awareness Fund should not happen. For this purpose, the scheme has been launched. Now the scheme will run for a period of 1 year from October 1, 2025 till September 30, 2026. Remember the timeline for the scheme. Okay, and the purpose of the scheme, the objective of the scheme is to encourage the banks to actively pursue the customers or depositors so that they can reactivate the inoperative account and return their unclaimed amounts lying with the Depositor Education and Awareness Fund to the rightful claimant in a timely and efficient manner. It aims to reduce both the stock of existing unclaimed deposits as well as the new accretion of the unclaimed deposits with the Depositor Education and Awareness Fund. The older unclaimed deposits should be returned from the Depositor Education and Awareness Fund, and the new accretion of the unclaimed deposits should not happen. Okay, that is the basic idea or the aim behind this scheme. The scope and coverage, it would be applicable to all the banks that are registered under the Depositor Education and Awareness Fund scheme, all inoperative accounts at the banks, unclaimed deposits with the Depositor Education and Awareness Fund which remains unsettled are covered under the scheme, and the banks, they are motivated. Now they will be given incentive also. They are motivated to pursue the customers or depositors so that they can get back their rightful money. Eligibility for payout, so inoperative accounts that are reactivated, so there will be incentive that will be given. Now incentive will be given on what basis? So the basis is that the inoperative accounts that are reactivated by the banks and the unclaimed deposits that is settled by the banks to rightful claimant during the period of the scheme. So the incentive will be given to the bank if they are activating the inoperative accounts or if they are able to return the unclaimed deposit to the claimants. Okay, this is the idea. Now, what is the basic idea behind the incentive. So payout structure, a differential payout structure is there. So up to 4 years, basically, if the payout structure is given here. So differential payout will be given to banks based on the period of the account remained inoperative or the amount of deposits in such accounts remained unclaimed. Okay, so up to 4 years. So if the unclaimed deposits are up to 4 years, so 5% of the amount or 5,000 rupees, whichever is less. Okay, so if the unclaimed amount is 10,000, so 5% will be, okay, 5% is the 5% is the amount that will be given, like 50 rupees we can say, sorry, 500 rupees is the amount that will be given. So if the unclaimed deposit is, let's say, 10,000 rupees, so 5%, that is 500 rupees will be given as incentive, as payout for returning the money, for returning the unclaimed deposit to the claimant, okay, or 5,000 rupees, whichever is less. 4 to 8 years aging category, that means the period would be reckoned from the date on which the account became inoperative or there are unclaimed deposits, basically. So aging category. Now if the inoperative accounts are from 4 years to 8 years, 6% of the incentive amount or 10,000 rupees, whichever is less. 8 to 10 years, 7% of amount or 15,000 rupees, whichever is less. 10 years and above. Now these are for the inoperative accounts. These are for the inoperative accounts. And unclaimed deposits, basically unclaimed deposits 10 years and above, for that the incentive amount will be 7.5% of amount or 25,000. So basically inoperative accounts, if they are inoperative up to 4 years, if they are inoperative up to 4 years. So this is only for the inoperative accounts. So inoperative accounts, if they are inoperative up to 4 years and they are being opened again, so 5% of the amount or 5,000 rupees, whichever is less. So this will be given as incentive. So 5% of the amount in the inoperative account. Let's say in the inoperative account there was 10,000 rupees. So 5% of the amount or 5,000 rupees, whichever is less. If the inoperative account is 4 years to 8 years old, so 6% of the amount or 10,000 rupees, whichever is less. If the inoperative account is inoperative for 8 to 10 years, if it is inoperative for 8 to 10 years, then 7% of amount or 15,000 rupees, whichever is less. Now coming to the unclaimed deposits. Unclaimed deposits are the deposits that are unclaimed for 10 years or above, that is transferred to the Depository Education and Awareness Fund. So 10 years and above, these unclaimed deposits, if they are returned to the rightful owner, to the rightful claimant, then 7.5% of the amount will be the incentive or 25,000, whichever is less. This is the basic idea. Any confusion in this? So the initial points are for the inoperative accounts, and the last point, because the inoperative accounts is with the banks itself, these are the inoperative account with the bank. Okay, now 10 years and above, these are the unclaimed deposits that are going to the Depository Education and Awareness Fund. Now submission of claims. Banks are required to submit their claim for payouts for the incentive on quarterly basis in the prescribed format within 1 month from the end of each quarter to the Reserve Bank. The claim made shall be duly signed by a senior executive identified by the top management of the bank. The claim form submitted by email should be to the Depository Education and Awareness Fund @RBI.org.in shall also be forwarded by post. Okay, the claims made by the Reserve Bank may be submitted. The claims made to Reserve Bank may be submitted to internal audit or inspection. The audit can happen if you are sending the claim, if you are sending the incentive amount, that okay, this is the incentive amount, so it shall be submitted and it can be subjected to internal audit or inspection as per the RBI's internal guidelines. The claim shall be settled by RBI within 30 days from its submission. So basically the banks, they have to submit the claims for their incentive, that they have done this inoperative accounts have been opened up, or they have become operative again, they have returned the money to the rightful owners, they have made the unclaimed deposits go to the claimant in such. So for that, whatever incentive is there, that has to be submitted by the bank. Within 30 days from its submission, the incentive will be given by the RBI. The money will be released by the RBI, or the claim will be settled by the RBI. Okay, so this is the idea. Now coming to the last news article, that is access to foreign exchange retail platform through Bharat Connect. So basically this article is released in October, and till 10th October, I hope you are covering the articles. So basically here, the foreign exchange retail platform, we have discussed about it before also. It is the foreign exchange retail platform. Retail platform where the retail, like the people like you and me, the retailers, the individuals, we can do the transaction in the foreign exchange. Let's say I want to get the dollars for my travel. I want to get the dollars to buy something. Okay. So usually I have to go to the bank and I have to buy the dollars and exchange my rupees for the dollars. I have to give the rupees to get the dollars. Now I'm not aware that what different banks are charging, or what is the conversion rate of the rupee to dollar. Maybe some bank is giving $1 for 70 rupees, some bank is giving $1 for 70.2 rupees and such. So there might be slightly different charges that might be out there. Okay, so for this foreign exchange retail platform has been launched so that the people are aware that what is the current rate that they can exchange their rupees for, or what is the current rate and what is the best rate that they can exchange the currencies. Okay, foreign exchange retail platform, this is operated by Clear Corporation, by Clear Corp. This was launched in 2019 with the objective of bringing greater transparency and fairness in pricing of the foreign exchange for its users, and the user should be aware that what is the price. Okay, and there should be transparency that should be there in the price, and the user should be able to compare the prices of by the different entities. Okay, with a view to expand the reach of the foreign exchange retail platform and enhance the user experience and enable a larger number of customers to access the foreign exchange market transparently and get the currency that they want in exchange of rupees in a transparent manner with fairness, it was announced that the foreign exchange retail platform will be linked with Bharat Connect. Now Bharat Connect is your Bharat bill payment system. Okay, so Bharat Connect is your Bharat bill payment system operated by the NBBL under the NPCI in phases. So it was said that the foreign exchange retail platform, this will be linked with the Bharat Connect, that is the Bharat bill payment system operated by the NBBL, National Bill like Bharat bill payment system, so National Bharat Bill Limited. Okay, so under the NPCI in phases, beginning with pilot enabling individual customers to purchase US dollars against the Indian rupee. So basically, it was said that foreign exchange retail platform will be linked with BBPS, with the Bharat bill payment system, with the Bharat Connect, basically operated by NBBL in phases, beginning with the pilot enabling the individual customers, the retail customers, to purchase the US dollars against the Indian rupee. So this is the basic idea behind the foreign exchange retail platform. So now the foreign exchange retail platform of the Clear Corp Dealing Systems Limited has been linked with Bharat bill payment system with the Bharat Connect. The linkage will enable the individual customers maintaining bank accounts with participating banks to register and transact on the foreign exchange retail platform. So this is the idea, that the retail customers or the retail individual customers, that are the customers, if they want to buy the foreign exchange, okay, if they want to convert their rupees into dollars, they will be able to use, the retail customers will be able to use the participating bank network as well as third party app providers app network like the Google Pay, Phone Pay, whichever is connected with the Bharat bill payment system also. So their applications can be used by the customers for the foreign exchange retail transaction. And this, as this foreign exchange retail platform has been connected with Bharat bill payment system. So this is the idea. Okay, so the individual customers that are maintaining the bank accounts with participating banks, they can register and transact on the foreign exchange retail platform via enabled digital channels of participating banks and through the third party application providers that are connected with the Bharat bill payment system. So now the foreign exchange retail platform, as it is connected with Bharat bill payment system, so all the participating banks that are allowing the Bharat bill payment system, all the third party application providers that are providing the Bharat bill payment system, they will able to provide the foreign exchange retail platform to the customers. This is the basic idea, and the customers they will be able to access the foreign exchange retail platform and they will be able to transact and register on the foreign exchange retail platform with the help of the participating banks and the third party application provider. So the pilot on the linkage between the foreign exchange retail platform and Bharat bill payment system, this linkage has been launched at the Global FinTech Fest 2025 by Shri T. Rabi Shankar, Deputy Governor of the Reserve Bank of India. Okay, to begin with, which are the participating banks? So it is Axis Bank, Federal Bank, ICICI Bank, State Bank of India, and Yes Bank. These are the 5 participating banks. Okay, customers of these banks can access the foreign exchange retail through the CRED platform or through the MobiKwik applications. So these are the applications through which, or these are the third party application providers through which the foreign exchange retail platforms can be accessed to purchase the US dollar against the rupees, okay, on a value cash basis, on the value basis for foreign exchange outward remittances. So if you want to send the dollars outside, if you want to travel outside, if you want to get the dollars against the rupees, so you can get the dollars against the rupees through the CRED platform or through the MobiKwik application if you have the account with the participating banks, with the Axis Bank, Federal Bank, ICICI Bank, State Bank of India, or Yes Bank. Okay, so this is the basic idea. Additionally, the customers of Federal Bank and State Bank of India can also access the foreign exchange retail platform through the internet banking application of the Federal Bank and State Bank of India. So these are additional channels also that is provided. Clear? Any confusion here? So going forward, the scope of the pilot will be gradually expanded to include more user categories, channels, banks, third-party application providers, and a wider range of forex transactions. Currently, it is only for rupee to dollars. So basically, ClearCorp operated the foreign exchange retail platform which was launched in 2019. This was for the foreign exchange retail transactions so that the individuals, they can know about the best transaction price for dollars and rupees and for the foreign currency and rupees, that how much rupees they can give to get a foreign currency or to get a dollar and such. The best prices they can see in a transparent manner through the foreign exchange retail platform. So to provide the greater transparency and fairness in the pricing of foreign exchange for the users, the foreign exchange retail platform was launched. Now the foreign exchange retail platform has been linked with the Bharat bill payment system, that is Bharat Connect, so that the customers through the participating banks, through the third party application providers, the customers can have the easy access to foreign exchange retail platform and they do not have to go to the foreign exchange retail platform website and such. So customers through the third party application providers, through the CRED and MobiKwik, if the customers have the accounts with the participating banks, through the CRED and MobiKwik platforms, through such platforms, they can purchase the US dollars against the Indian rupee. So the pilot has been launched where the dollars can be bought against the rupees through the participating banks by the customers through the third party application providers. Any confusion anyone has in this? All clear? So this is it. Any confusion anyone has? NBBL, this is under the NPCI. So NBBL is your NPCI Bharat Bill Pay Limited. Okay. Now the Bharat Connect, that is Bharat Bill Payment System, that is Bharat Connect, it is operated by NPCI Bharat Bill Pay Limited, and the Bharat Bill Payment System has been linked with the foreign exchange retail platform so that the customers through their participating banks that are participating in the Bharat Bill Payment System and such, and through the third party application providers like the CRED and MobiKwik, the customers can get easy access to the foreign exchange retail transactions and foreign exchange retail platforms. So this is the basic idea. So the pilot is being made available to the customers of the 5 participating banks: Axis Bank, Federal Bank, ICICI Bank, State Bank of India, and Yes Bank. The customers of these banks can access the foreign exchange retail platform and transactions through the CRED and MobiKwik applications to purchase the US dollars against the Indian rupee, okay, on a value cash basis for foreign exchange outward remittances, the dollars that they want to send outside, that means the travel that they want to do or the purchase that they want to do, okay. Loading of foreign exchange cards, physical delivery of foreign currency notes as offered by respective participating banks. The customers of Federal Bank, there is a special category, the customers of Federal Bank and State Bank of India can also access the foreign exchange retail platform through the internet banking application of these banks. So this is the idea. Now, as you know, so there is a big announcement for now that on 15th of October 2025, you have a session with me. You have a session with me, that is your marathon, Maha-marathon session for RBI notifications and for the finance current affairs. Okay, so 15th October 2025, 5 p.m. you have a Maha-marathon session for RBI notifications and finance current affairs. So be present in the session, and there we will discuss the questions from this session also. So on all these articles, I'm not going to discuss questions with you today, because tomorrow we will discuss the questions. Okay, so this is it for today. Thank you everyone. Thank you for joining the session. I hope you have understood the articles. If there is any confusion, do write it down. And on 16th, now there will be no finance current affairs session till your examination, till your phase 1, that is till 18th October. There will be no finance current affairs or finance 360-degree session. Okay, so on 15th you have a Maha-marathon session with me for your finance current affairs, as well as for your RBI notifications, RBI press releases. And now there will be no finance 360-degree session, so that you can prepare and you can revise whatever you have studied till now. So focus on revision, whatever you have studied till now, and check your preparation tomorrow with me on the Maha-marathon session. Okay, so this is it. Thank you everyone. Thank you for joining. See you in the next session, that is after the examination. Okay, I hope you clear the phase 1 and you reach to the phase